Well, let's start by putting the focus on those new relaxations coming in from the Reserve Bank of India late yesterday. The RBI has essentially relaxed norms for securitisation transactions by NBFCs. The minimum holding period has been cut to 6 months from what was earlier 12 months for loans with a maturity of over 5 years. And risk norms as well have been tightened for NBFCs, increasing the retention requirement as well. So now we've got with us VP Nandakumar, MD and CEO of Manappuram Finance, really talk about what kind of impact we should expect here. Mr. Nandakumar, thanks very much for joining in. Always good to have you on. My first question, essentially, how will this impact your company?
No, this will definitely be a welcome step for the sector, and our company also is benefited because our commercial vehicle portfolio, which is nearly 1,000 crores, as well as our home loan portfolio of around 500 crores, the liquidity as well as microfinance, the relaxed norm reducing the minimum holding period to 6 months is very much positively get impacted.
All right, so your housing finance portfolio is about 500 crores, vehicle finance about 1,000 crores, and microfinance, if I'm not mistaken, that stands at just under 3,000 crores. So overall, we're looking at about 4,500 crore of your portfolio that would qualify this for this easing that's been given for securitization. Is that right?
Right.
All right.
Out of this portfolio, nearly over 3,000 crore portfolio will benefit from the relaxation. These can be securitized as the minimum holding period has been reduced.
So about 3,000
around 1,000 crores are added to the pool.
All right, understood. So this, I would assume the 1,000 crores then would be those loans that have that come under the 6-month period rather than the 12-month period earlier. Is that right?
Right.
All right, help us understand then, what are the risks associated with this easing? I understand it's only for a 6-month time period that the Reserve Bank has given this, unknown at this stage if it will be extended, if it's just to tide over this difficult liquidity time period for the companies or not. But give us a sense of what this means in terms of risks. If investors come in and they only have clarity of a 6-month time period versus what was earlier a 12-month time period, do you, have any concerns? Does that flag any issues for you?
No, it doesn't flag any issue. The concerns are about the risk, as you mentioned, in the sector, because sufficient seasoning. Why minimum period was intended was a seasoning for a reasonable period. Now, to bring liquidity, this is an opportunity for the companies to tide over the tight liquidity position. So, because of that, it's a welcome step.
All right, fair enough. Give us a sense then, how much would you be looking to sell down as via this route that's been made available?
Maybe around 500 crores.
Okay, 500 crores. So this would be over the next 6 months.
Right. Because, in fact, we don't have much liquidity pressure. So only that is our requirement. There is the maximum requirement we have.
All right, point taken. At this point, sir, if you could give us a sense, we have been touching base every so often as we've been, navigating this difficult liquidity time. But what is your borrowing at the moment from the short-term debt market?
Our borrowing in the CP market, which is a short-term market, is around 25% on the consolidated level. Whereas we have the ALM, which is still positive, because our major loan book is our AEM comprises 3 months duration gold loan. So the borrowing is the short-term borrowing is on an average of 90 days. So there is a perfect match there. So this where the 75% of the consolidated AEM is in gold loan, this 25% of the portfolio in short-term borrowing, that doesn't really affect our ALM matching.
Okay, and at what rate have you been borrowing, if you could give us an idea?
That has gone up to 9.5%, but yesterday we borrowed at 8.4%. So it has gone up, but now it is cooling down.
All right. So at the moment then, what is the kind of exposure in terms of credit lines from banks?
We have 55% of our total loan arranged is from the banking system, out of which 2,000 crores limit is the unavailed portion from the banks. We have sufficient liquidity.
Okay, so most recently borrowed at about 8.4%, but it has gone up to about 9.5%. Where do you expect this number to move in terms of basis points? How much additional impact are you expecting in terms of borrowing pressure?
So, with the liquidity further eased through this reduction of minimum period for securitization, I think the market will further cool down and may settle at around 8%. This is what I expect.
All right, so we can expect it to move down. Would you say 9.5% then was the peak as far as borrowing costs?
So now the lenders are highly selective. They look at the company's ALM, etc. So where there is an ALM comfort is there, the rates are expected to be cooled down.
Okay, how much securitization have you been able to undertake so far?
So in our AEM, so far we have nearly 1,000 crores only in the consolidated AEM.
1,000 crores is the kind of securitization, and has there been interest? How much more are you looking to sell? I know you said 500 crore is the number going ahead in the next 6 months, but had this easing not come into place, what was the number that we were working with?
You know, even without this 500 crore securitization also, we don't have any liquidity issue. The securitization issue, especially this PSL portfolio, priority sector portfolio, will definitely bring down our cost of borrowing. That's why we are looking at, not because we have some liquidity pressure.
All right, fair enough. I just want to get a sense then from the business point of view as well. You know, you had an expectation of about 10% overall gold loan growth for the year fiscal 19. Is that still on track?
Yeah, it is on track. And recently we have raised NCD also. We raised over 250 crores. We plan to raise another round of retail NCD from the market from the middle of January. So we are raising retail NCDs also. So we are making sure that our liquidity, even for the growth, is not impacted.
All right, to what tune, if you could just clarify for us, what kind of fundraising are you looking at for the remaining part of the fiscal?
One, we are getting some additional borrowings. Recently, we got the sanctions from NABARD. We are expecting a few more sanctions from multilateral lending institutions. We plan to raise some 700 crores, 750 crores more from the market through retailing NCDs. One round we have done, successfully done. We raised 260 crores.
Okay, so 260 crores raised already, another 700 to 750 is what's on the anvil, and this is, we're talking about the remaining part of this fiscal, is that right?
No, this fiscal we may raise another 300 crores. The balance will be raised during the first quarter of FY20.
All right, just a final question then on gold prices. You know, we've seen prices go up by about 4% if we look at it from the August low. Does that mean that your loan value has gone up as well? What should we expect in terms of financials for the third quarter?
Now the gold price has cooled down in Indian market because the rupee has appreciated. Even though the gold price there is, the international gold price is steady at around 1,225, etc. So since the rupee has appreciated, in the Indian market the gold price remains at a rate which was prior to gold price gone up in the recent past. So now it has cooled down by 150 rupees. So I think this will remain here. So we don't expect any positive impact out of that.
All right, fair enough. Expect prices to remain stable at these levels. We leave it at that. A pleasure speaking to you. That's VP Nandakumar, MD and CEO at Manappuram Finance. Gold prices to remain where they are. The 10% gold loan growth outlook also remains in place for fiscal 19. And as for the relaxation, about 500 crore is the kind of portfolio that the company is looking to sell down, perhaps on account of this easing that has come into effect by the Reserve Bank of India. But let's shift focus then. Sources telling BTVI that the bidding